Hello and welcome to the Friday wrap up here on Landy's Crypto Corner, where we're going to take a look at Bitcoin on the daily and follow up where we left off in our Wednesday check-in, and of course where this all started from on the Monday macro video. Now, Bitcoin has made a nice move to the upside here off of this low, and for Bitcoin to really change structure, we need to see closes back above $65,000, this last high up here. And realistically, what I've been saying is it's more statistically likely for us to see a lower high because this was a lower low move. We had this little bit of an uptrend here. Yes, we did have lower highs as it compares to the $70,000 high and the $68,000 double top closes up here. But realistically, we did have a small uptrend form here on the daily. It was not a complete uptrend. We had the higher low, higher high, and we like to see another higher low and higher high for a complete trend. And typically what Bitcoin has been doing since it's been ranging around is every time that it does the higher low, higher highs, since making the first downtrending move, it has failed. We did get a higher low, higher high, higher low, equal high up here. So it did fail to complete the uptrend on the big third move down. So we have our big first move down, second move down, third move down, and then a trend breakdown of this smaller uptrend, I should say, because it is a daily time frame uptrend, but not a complete uptrend. It was a nice trend reversal to a dump off right back to the lows. Now we do have equal lows between the closes here at around $70,000. That has thrown one drive of bullish divergence, regular bullish divergence on RSI. But when speaking about trend, as it stands right now, Bitcoin still needs to close above that $65,000 to make this this trend breaking downside move just a deviation of this smaller uptrend. Now, what I will say is I do think that it's unlikely. Now, this is anecdotal, so I will lay out the conditions for it to come to fruition here. But anecdotally, I will remain looking for a lower high here. And then after looking for a lower high, then we have the criteria of, let's zoom in here. Then we have the criteria of this low, right? In order for trend to continue to the downside, we would need to see closes below, danger below that $54,000 right here on the close. But realistically, any breakdowns below 52,500, and we'd be looking for, lower high, lower low structure, and for at least a test down further, likely around the entire range's wick low here. It's fair game between that $49,000 and 53K or so. Any breakdowns below there, and I am looking down to some lower levels between around, and we'll look at this in just a moment, but between around below 49K, it's really realistically it's somewhere around 45.5 or 45 to 49. That's a big monthly lower high level from the bear market lower high of 2022. And, at worst, I'd be looking down to Bitcoin mining electrical cost, which is sitting at around 43,200 currently. We'll double check on that before I let you go here. But, not much has changed. Anything below $65,000 right now is a bearish bounce. So although we like to see green candles and it's exciting, we had a nice up move on a Friday, but up moves on a Friday that go into a weekend that kind of is lower volatility. If we don't see continuation over the weekend, it's the same thing that we were looking at back here on Saturday and Sunday, right? We did not get any continuation. We needed to see that continuation, reclaim these lows up here, and start to push higher towards 68 to 70. And we did not get that. And of course, what happened? We saw the big dump off. We saw it put in a high, set that swing high and closing high on that Monday, the 26th of August, and then it was a move down to test in and around the 56,120 area on a wick, and of course on the closes here at 57.5, and then below there we were looking right to 54, and that's actually what we got with a nice little stab down below it. And I really don't like price action on Fridays that moves up into a weekend. Now, unless there are some players in the market that want to take advantage of the lower liquidity in the on the weekend and push things up, then maybe there's a chance that we could see some continuation to the upside. and testing a little bit higher. Otherwise, I am looking for a lower high still. My criteria for not looking for a lower high is closes above $65,000. So again, this was the first high that was put in 2021. So keep that in mind. That is a psychological area of resistance and a real technical area of interest and resistance overhead. And when looking at this as it relates to our areas of interest chart, which is just horizontal support and resistance, after talking about trend, that if you've been around here for a bit, that I like to go through like the 4 best practices for breaking down price, and that is trend, support and resistance, volatility, and momentum. And the first 3 make up the 4th. Often you'll see many technical analysts kind of rely on momentum first. And realistically, if you know how momentum is formed and it's the first 3, then you have much more confluent areas to be working with than just relying on one confluent factor or one signal factor, as I do often see in this space. So when one of the nice areas gets recovered like this into a weekend, just like when we saw last this late August weekend, pushing up and closing above that on that Friday above the top side of the recovery zone. Well, again, we have a Friday that pushes into the bottom side of the recovery zone here at that 60,200 to 300 area. If we do see this lost either over the weekend on a close or coming into next week, 58.4, the top side of the risk zone, is certainly in the cards there. Anywhere below there, and we're right back to the 58.4. Somebody's on their ATV. Sorry about that. It is the weekend after all, so everybody's going to be jumping on the ATVs around the house here. But yeah, the 58.4 to 55.850 risk zone, bottom side of the risk zone, top side of the danger zone is fair game, especially on any closes on the daily below that 58.4 now. That would be borne upon losing the 60,000 to 60,300 level here at the bottom side of the recover zone. If Bitcoin is going to push up, be aware of the resistance in between the bottom side of the recover zone and the top side here, which is roughly 60,300 to 63.8, almost 64K. Look left. There's a lot of wicks thrown in and around $61,000 on the closes here. There's around $61,000 rather, and the wicks around 61.8. That's the next area that I would be looking to. Above there, the actual swing high here of this lower high at around 62.8, and then we mark up another 1,000 to around 63.8 to 64. Anywhere above there, and I would be looking for $65,000 to get tested in towards that pivot zone at 65.5. Now, of course, this is local, so 65.5 is this lower high. This was the first big move up. We did get lower highs after seeing the all-time high, but it was in the context of higher low structure. So it wasn't until we saw the lower low trend break and then lower high that was put in at that 67,272 that we were like, okay, this is the first big lower high of this range. Stabbed down to that 56.5 and then popped right back up and threw a wick and a high at around 65.5. Obviously not closing above that prior cycle's first high there at $65,000. Came down in a higher low, into a higher low, and then ran right back to the top side here. And you can see this is actually an order block candle on the daily here, and some higher term timeframes, I believe. Yeah, it might be like a 2-day, 3-day in there with those candles. I don't quite remember. We can always look at that again on Monday. So the criteria would be that anywhere above $65,000, I would be looking to this pivot zone at around 65.5 to 67,272. Landy, why so specific about this pivot zone? Well, the first lower high that was put in was holding up the high side of the lows of this uptrend before the second major downtrend of the range. When that failed, you'll see that it also put in its first lower high. That's the run the high zone above there. So you see first lower high, first lower high. Those are some key areas on my chart. And you can even see after I put in that first lower high of the second downtrend here, where did it try to stay? Well, it tried to stay right around the close opens here and rejected right there at 67,272 before dumping off down to that 53.5. This is another big one that I want to note. Anywhere above there, 68 to 70, and then 70 to 72, and then the all-time high, basically 73 to 75, 75 to 78, 78 to 80, mid to low 80s from there. I would be looking, around $90,000 as a key front run area for 100K, but we'll get into that next week. We'll talk a little bit more about that as we have an important week next week. There's rate decisions next week on Wednesday, the 18th. There is the quad witching, which is the options expiry date on Friday the 20th. And that's really just setting things up in for the final quarter of the year, and a lot of liquidity rolling. And we got to see what the Fed's going to be doing as well, because that will have an impact on how some of that liquidity rolls. Not all of it. Some plans are already in place, but a lot of people will definitely be going, well, if everything's moving down because they decided to raise rates or keep them steady, and then obviously rate pivots and inversion and all that stuff. For those of you that know what that is, that will obviously be the narrative. 99.9% of that stuff has already been decided ahead of time, by the way, by the market participants. And to be quite honest, traditional markets look pretty strong, although they are in a failure area. So beware. This is going to be, essentially the upside to the downside. I want you to pay attention to this second big wick low. So we've got the $56,000, and you can see that this level didn't really act as a key area of support too much. In some of the dailies it did, like the first real big move down towards it, and the second major downtrend of this range. It tried to hold it, it kind of bounced from that area on the higher low of this uptrend. It tried to get front run in and around, this higher low of this little uptrend, that kind of stuff. But realistically, the major one, and when we throw on volume, this is kind of key as well. So if we throw on volume, there was not a lot of volume coming in. Even at the 56,500, we had higher volume or equal volume in and around the 53.5. That stepped our danger zone down. It was 56.5 down to, it was basically the danger zone was the close open here at 58 to 200 to 300. And then that 56.5, but the danger zone got stepped down once this low was put in, this uptrend formed. But 53.5 hasn't been closed below. If we did see 53.5 close below, that is where I'm looking for this wick low area to be fair game, anywhere between $53,000 and $49,000 at the top side of target 2 of distribution. Doesn't mean that it's going to have to get a straight shot. It could just trend down, but a straight shot through, would be likely a nice liquidity event for those players in the game. Anywhere below 49K, and we have that key level 49 to 45.5. That encompasses the close open of the bear market lower high of 2022 at 45.5 to 48,240. But realistically, you can just call it 45 to 49 or 45 to 48, even if you like. If it was just a swing down below and then close back above $49,000 and get a nice bounce that took out some lower highs, that would look really good too, as likely being the low. But if this is the low, especially on the weekly time frame, as we head into next week, if this was going to be the low, and it's going to be the low, we need to see $65,000 get closed above. I do want to kind of call that out for some of the longer term time frames. We will look at the weekly shortly here, but on any kind of emergency scenario, we see a high put in. It's starting to tell us that it wants to head down. So already kind of setting in motion a lower high. Anything that passes that 52.5 that gets exacerbated by news, I would start looking down to, in a real crash off scenario, just like what we saw with the Japanese yen carry trade. It's just exacerbated something that was already occurring, the big downtrend. We often see this in these kinds of time frames as well, but I would look right to the Bitcoin mining electrical cost. And now I did get a few questions about this. Why do I have a target 3? Well, the target 3 I'm not going to talk about till Monday, but I will talk about this. This is really only if we start seeing closes begin to trend down. Any kind of straight shots down, even that go through Bitcoin mining electrical cost, I expect to get picked up and more than likely going to be the low. Of course, we would come back to it and evaluate, but it's usually if we see trend down on the daily, we'll start to see mining costs drop further, and this would be the drop in the bucket that I would be looking for at around that 42.5 to around 38.5, so some weeklies and monthlies in there as well. Now, let's go ahead and dive really quickly into the Bollinger Bands, because I do think we're getting a little bit of a volatility contraction, and we are on the Bollinger Bands. And, this was, kind of it was a big move down. I mean, technically speaking, this was an expansive move down into support structure and then mean reversion back to the upside and then a retest. So, I'm more bullish than bearish, I think, as long as Bitcoin is closing anywhere above, 53 and a half, especially, and then staying above that 52 and a half wick. I'm more bullish than bearish. And likely looking for, lower high, higher low structure. So lower high, higher low, or equal low. I don't really want to see 54K tested again. I don't want to see a third equal low. That would be very likely to head down and test that 52 and a half. But realistically, it wouldn't surprise me if it got down there, because you can actually see from the, let's get rid of the volume. We are going to keep the support resistance lines on the chart here, only because I want to make sure that you understand that we have confluence. This is another point of confluence with volatility. Now, volatility expands and contracts in terms of the bands here. I have my little volatility metric, courtesy of pilfering the code from the caretaker, who makes a lot of Eric Crown's indicators over there. He gave me permission to use that. I just made a box out of it. You can always get the volatility indicator called BBWP from the indicators tab up here if you want to see the actual chart itself. But I have a little box here showing that we still have, volatility staying pretty high, right? Big move down from one side of the bands. Maybe do we see a move to the upper second here? Well, Bitcoin did get a close above the upper first, and that just so happens to be right at that resistance that we've been talking about at 60,000, 2 to 300, right? So if we were to look for a further upside move, maybe we get a little bit of a spike over the weekend or something, or coming into early next week, it would have to happen over the weekend, because this is just going to keep contracting if it just goes sideways. But, the upper second is right around that 62, 62.5, 62.8 level. Anywhere back below the upper first, the basis and the support here at 58,400 rather, is fair game. Anywhere below the basis, you can see the lower first lining up perfectly with 55,850, which of course is this close open low structure down here at the top side of the danger zone. And then below there, we've got $54,000 to close open here. And if that starts to get dropped, we're going to start looking at expansion down to, at minimum, test this 52.5 low. Anywhere below there, we're looking for distributive, or move down into distributive structure. There's a good argument to be made that we've seen distribution into what could be forming as reaccumulation right here above that 53.5 level, remaining above this wick low of the second major downtrend. That would actually, it's starting to paint that way. And again, above there, this could start turning into a reaccumulation structure. It's kind of looking that way, but nothing is confirmed. Anywhere below that low, we are really realistically looking at 53, and that all the way down to that 49K wick is fair game. To the upside, if we were to see the upper second standard deviation get closed above, I would still need, because it is slightly lower than this high over here at 62.8, would still need to see it close above this high at 62.8, test 63.8, maybe even get above and start digging into that $64,000 area, 64.5 by the upper third, right around the close opens here. You can see that they're slightly lower than that upper third, but that would start to show us the indications that it's going to test $65,000. I don't have an opinion as to whether or not that would happen over the weekend. The only times that you really see big moves over the weekend is when bigger players want to push the market around to get fills. So, that can also be a counter trend signal. Like if things are going up for a break and equal highs and then dump off, that kind of thing, filling shorts, or head back down to try and fill longs over the weekend. So we haven't seen a lot of that lately. It's just kind of been Sunday when CME opens, the markets, the market participants in traditional markets are already kind of putting their chips down, based on what they were seeing on Friday closes. So, I don't really have too much of an opinion outside of that. Let's go ahead and take a look at momentum, and we'll get rid of the actual zones of support and resistance here, and then we'll jump over to the weekly, and we'll wrap things up here on what I would like to see occur over the weekly for the bulls, and we're going to talk about what I would like to see for the bears. So if you're bullish, I'm going to tell you what I want to see. If you're bearish, I'm going to tell you what I want to see. I'm a trader. I don't have an opinion. I trade both long and short. I'm in this to make money. I day trade every single day. So, I'm not, don't look to me to be your bullish confirmation guy or your bearish confirmation guy. I'm just going to give you the conditions based on what I'm seeing. And I think that actually works out well. No matter if you're bullish or bearish, I get a lot of positive feedback with that. And I do thank you guys and gals for that. Yeah, man, one of the dangers here is, where is this? Is this the, yeah, that's not too bad. Where's the bullish control zone? If Bitcoin could make it to the bullish control zone, it can possibly, yeah, no, see, this is set up for bearish divergence and continuation drive. I'm having trouble here. Sorry. All right. So even if Bitcoin were to push up to 62.5 or $62,000, so even within, pretty far away from 65, right? That's the edge of the bullish control zone, right here of RSI. That is, that we would see, this is the $65,000 high. Then we get a bearish continuation drive. That's where we have, higher high RSI, lower high price action, and that's kind of dicey. That's dicey territory. Main reason being is that expending a lot of momentum to get back to the upside, and not really getting that price appreciation will result in a hidden bearish divergence or an actual divergence of RSI and price in this case. Not a regular bearish divergence, but hidden bearish divergence. I'm trying to think of what other people call it now. It's a hidden bear div, basically, is what it is, instead of it's a continuation drive. I said it earlier. So basically that would be, lower high, kind of what I'm talking about. It would have to push up pretty significantly into the bullish control zone to, even avoid some of that, continuation drives of bearish divergence. Which is, more than likely going to result in some lower highs. And that's where we just got to keep an eye on the lows, look for some higher lows. They can go and break wherever that lower high comes in, right? That doesn't rule out Bitcoin just, knocking out 65K to the upside. It's still, Bitcoin does crazy stuff, right? Yeah, let's go ahead and look at BBWP, so volatility. I want to get a gauge for this. So volatility is increasing, but it's within the context of the bands contracting. So when I see a read like this, it's because it's running from one side of the bands to the other, closing above the 20 simple, which is actually the basis band of these bands here. And until I see closes above the upper second, I'm not looking at this as a viable expansion or below the lower second. So realistically, take out the last low, expansion down, take out the upper second and this high over here. I'm looking for expansion up to at least test $65,000. So we're kind of getting a mixed signal with expansion and Bollinger Bands here, which is telling me that Bitcoin's more than likely going to get rejected on the way up if it continues, and maybe even on any downside move. And then it makes a decision later on, preferably for the bulls in higher low fashion. And then take out wherever a high would come in, as long as it's, not a higher high, but a, lower high as it relates to that $65,000. Let's go ahead and check on the weekly. Let's get some criteria out of the way, and I will let you go enjoy your weekend. All right. So, hey, guess what? Above $65,000, that's a trend break. On the weekly, we have this downtrend. Yes, we have a closing low that is a higher low with that lower low wick, and there is the potential for Bitcoin to paint a low on any closes here above 59,825. Bitcoin would paint a lower low close with a higher low wick. So very confusing here on the weekly for many people, but realistically, if it can paint a low here, it's going to do it, on any closes above 59,825. So basically $60,000 and above. You'll see another low be painted. That will at minimum solidify the swing low here. It will paint a closing low. I'm not excited until I see price pushing back above $65,000. So just understand that that's the criteria. Below $65,000, I'm still bearish on the structure. We need to see $65,000 break to break this bigger downtrend on the weekly. Do I think that Bitcoin has some opportunity here? Absolutely. You might notice that even the basis band on the weekly, which is the 20 simple there, is at 62,800 almost, which just so happens to be one of those key daily levels. That's that swing high above the clusters of the prior higher low candles. And close there was 61.8 and then 62.8, just to kind of illustrate that, so I'm not just explaining it. When you look at this high right here, the high is coming in at 61.7. Wicks are kind of coming in at 61.8, and that high is coming in at 62.8 right there. When Bitcoin broke that, that's where it ran to $65,000. And that's right where the weekly basis band is. So again, a lot of local resistance, and then $62,000 is also the edge of the bullish control zone on the daily. So understand that. That will update. I will update you on what that updates to on Monday. Big thing here is bears want to see price action. Who knows? It could dump out over the weekend. I highly doubt it right now, but I've been wrong about the weekends before. So we just have to keep our eyes on it over the weekend, as there is a lot of distractions, especially with football here, American football here in the United States. Very, very popular. We got a lot of that going on over the weekend. So look, bears want closes back below 52.5. That's what they want. Then they're pushing to that low. They want to come down here and test into Bitcoin mining electrical costs. That is the dream for them. And, I'm never going to say no to a good trade down or a good trade up, but especially a trade down towards electrical cost. It's not anecdotal because I have the data for it. In the electrical cost I'm looking at on another page, and it's the same. So it hasn't changed. It's still 43,200. I don't want to blind you. Everybody gets I get a lot of comments like, oh my God, that chart is so white from coming from these darker charts. But one of the bigger things that I do want to explain here, and it's not anecdotal, I've shown this many times, but Bitcoin in the very worst scenarios, at the very bottoms of bear markets, where does it head to? Bitcoin electrical cost, and at its worst, it rarely trades under it. There's been very few days that it trades under it, and even around it. And in March of 2020, when we had when we had a literal global economic crash, Bitcoin just spiked its electrical costs and then pulled away like an MF, you had to mark it in. Even if you had resting orders, it wasn't picking it up. So, in worst case scenarios, the only thing that I could ever think of is if Bitcoin was trending down, that's going to come down significantly further. That's where opportunity lies. Of course, not financial advice. If Bitcoin were to start to trade down towards its electrical cost, even at it and especially below it, guess what? Miners will buy it below it because it's below their literal lowest cost to mine Bitcoin. So that's gonna be it. You have a wonderful weekend. Have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe, and of course, as always, stay safe. With all of that being said, Landy out. Take care.